Everyone, my name is Mayra Ceja. I am a partner at Republic. I'm really excited here to present to you really our vision, some of our product offerings, and talk about our token launch. So the first question that you might ask is, what is Republic? Republic is an investing platform where anybody can invest. It really includes both accredited and non-accredited investors. We are backed by some of the top VCs in the world, including Binance, Passport Capital, and FBG, just to name a few. And really, part of our mission is really to provide the greatest access to both investors and capital for both startups and investors. What we do know, right, we all are familiar with some of these facts, that opportunities are not equally distributed. We all know, right, that over half percent of the wealth is controlled by 1% of the population, that when you look at VC investments, nearly only about 3% of females get funded from VCs, and that a large portion of that capital is geographically concentrated. We're here to change some of that. We provide worldwide access to all of our investments. So when people ask why Republic, it really comes down to 4 tenets. It includes compliance, services, reputation, and our team. In terms of compliance, we're one of the very few that have been around for 3 years that are compliant forward. Not only do we say that, but we've actually lived that. We've gone actively out of our way to recruit some of the top in-house lawyers who work with us and can get us really fast solutions that are fully compliant at Silicon Valley speeds while staying on the right side of compliance. Additionally, in terms of our services, we really love to work with entrepreneurs from the beginning to the end. That includes whether you're doing your first initial raise of the first $1 million to doing your Series C. I'll go into a little bit more detail about some of our more product offerings in a bit. But our third tenet is really our reputation. We are well known in the industry. Some of my coworkers are here. We've been listed at several of these media publications, which include Fast Company, Forbes, and TechCrunch. In terms of our team is comprised of really some of the best in the industry, coming from top firms like Bloomberg, Goldman Sachs, and Facebook, and some of the top universities around the world, including Yale, Wharton, and Princeton. And as a result, we've been able to raise for companies $150 million over the last 24 months. That includes over 100 companies that have come on our platform, raised publicly from their followers, from their community members, to also raising from some of the top VCs. And here's just a few of the VCs that have backed some of our companies and ourselves. So this includes top VC firms like Andreessen Horowitz, Founders Funds, and Union Square Ventures. Now, the next question you might ask is really, why crypto? We're not just a fundraising platform for traditional equity raises. Over the last couple of years, we've really set the stage to help a lot of ICOs raise. We see ICOs really as an extension of our crowdfunding space. And we really wanted to find a way to leverage our investor base, provide more access, and really further provide our thought leadership in this place when it comes to compliance. So when it comes to our services, we provide really end-to-end solutions when it comes to fundraising. Anything from public sales, private sales, airdrops, tokenization, accreditation, and advisory. When it comes to public sales, as I've mentioned, you can raise up to $1 million from non-accredited investors around the world. Our network includes over 100,000 of active members in our ecosystem that are actively looking to invest in projects for as little as like $10. When it comes to private sales, we are the only platform out there that has over 200,000 accredited investors in our ecosystem that are looking to directly invest. We do that a couple of different ways. We recently also acquired a broker-dealer that allows us really to do really large raises, but we can also do syndications. So if there's still a portion of your round that's not being met, we can go ahead and take a look at that. If you're interested in airdrops to whether it's stimulate your community or reward your community, we can also help with that. When it comes to tokenization, whether it's tokenizing your equity or tokenizing your assets, that's really where our expertise is. And we'll go ahead and talk a little bit more, even how we've also tokenized ourselves in the next talk. When it comes to accreditation, we can help with KYC, MAL, and make sure that your entire raise is fully compliant. And lastly, we have increased our advisory arm services. Currently, we're working with very interesting projects, including Laurent, which is actually the former director of the Matrix, who is looking to tokenize a movie, to other projects like tokenizing a soccer league. So those are just a few of our product offerings. Now, I know what you've all been waiting for is, where's the tokenization? So if some of you may have looked at your swag bag that was emailed to you. This is your NFT swag bag that was emailed to all participants, and you may have seen something that looks like this. This is the Republic note. The Republic note really represents the future earnings of our revenue. And for that, we're going to have Laurent talk a little bit more about that. Thank you.
Easy peasy. All right. Good morning, friends. So let's talk a little bit about the note. So far we've told you a little bit about what Republic is about and what kind of product offerings that we've been hoping to bring to the crypto industry to make it better. What I'd like to talk to you a little bit about now is how we can use blockchain technology to improve Republic's core offering. But in order to do that, I need to explain to you maybe a little bit more in depth about what it's like investing on Republic. So at the end of the day, all Republic is a platform where investors come in and buy securities from the startups that are currently raising. Now, the reason why we were interested in actually creating a token-backed securities and basically tokenizing all of those securities, the securities that the investor would buy from the startups and also the cut that Republic would take from every startup that raises, is because it solves two core problems with Republic's initial fundraising platform. So we're going to go into those two right now. The first problem is liquidity. So if you're not aware, if you were to invest in a startup on Republic, the securities that will be issued to you once the campaign is finalized, you have to hold on to for a year by law. There's nothing really we can do about it. But once that 1 year cliff hits, if you want to trade those securities, you're free to do so, but there's no real second-hand market. So our thinking was, you could create a second-hand market to facilitate those exchanges, or instead you could create token-backed securities out of all of those out of all the shares that our startups actually issue to the investors so that they instantly become tradable on all crypto exchanges. So that's problem number one. This relates to the securities that our investors receive. Problem number two has to do with the securities that Republic keeps as a cut. So this is what we call engagement. So as you all may already be familiar with, investing as a practice is very low engagement. One thing that we tell our investors is, you come in, you invest, but don't really expect any returns until 5 to 10 years. I mean, we tend to deal principally with a lot of very, very early stage companies, which means that the returns on investments are on the long term, right? So you have to adjust your expectations. But that creates a problem because then people come to our platform with the anticipation that, I'll come in once, I'll invest in the companies that I'm interested in, and then see you guys in 10 years, right? So, provided that we have good deal flow that will bring people back, but nevertheless, what we see is that in our investor base, there's a slice that is sort of very sophisticated investors who will come back and invest on a continual basis. But there's also a significant chunk of people who will come because they're helping out a friend, they're helping out a parent, a family member. They come in once, they invest, and that's it. So we need a way to incentivize this significant chunk of people to actually come back and re-engage. So here is where the cut of Republic securities that we take from our issuers come into play. So we have this giant pool of securities, and the thinking was, why don't we actually reward the users and investors who come on our platform for actually engaging with our platform more? Why don't we reward them with some of those notes? Those rewards can be awarded for things like reinvesting, asking meaningful questions of founders, and basically staying engaged in any way, shape, or form. The reason why that's appealing is because, if you reward users for engaging with your platform that way, what that creates is a virtuous circle, whereas you increase engagement on your platform, which makes the platform more valuable, which means people get more tokens, and those tokens themselves become more valuable, right? So you essentially create a virtuous circle of people coming in, investing, engaging, which makes what they're doing inherently more valuable. Now, we're going to get into a little bit in a moment about our special early distribution and our plans for a public sale. But nevertheless, one thing you may ask is, given the fact that those tokens are backed by the future revenue of those startups and the future revenue of Republic, why should I bother now? I'll just wait until it becomes tradable, and then that's when I'll come in. So be that as it may, what we also wanted to do is, should you find yourself as an early note holder right now, we wanted to also reward you in a number of ways on the platform. So the shape that takes in, for example, is you may get, as a significant note holder on Republic, early access to certain raises that we know will probably cap out. I mean, we've seen some of our most successful raises cap out in like a few hours up to a day. You don't want to miss out, but if it turns out that you've been an active member of Republic and you've invested a lot and you've done a lot of things for us, and in turn we reward you with a lot of notes, we may offer you early access to that sale, so you are insured to basically get your slot. We may also offer you things like getting off the wait list a little bit earlier, or give you priority. So there's a number of perks around the platform that we offer you that you can get as a note holder right now. Now, as I mentioned, we did have a special early distribution on April 8th. The point was to basically gauge the community interest in that kind of approach, because I'm not familiar with a lot of platforms who actually did anything remotely like this. And so while we will have our public sale later this year, we wanted to know if that thinking of rewarding investors and users with tokens that are backed by startup revenue was actually meaningful. So we basically had an early distribution on April 8th. So like I said, to gauge community interest, to drive the engagement, and also to reward the early adopters. But we invite everyone to come check it out. All of the engagement setup that I've talked to you about is live. You can sign up. In your swag bag, you'll get an early note grant that you can claim as soon as you sign up. And you're fully welcome to come in, invest, ask questions, and engage with the platform overall. And you're free to earn those tokens right away. And that's it. We'll be sticking around for a little bit to answer any questions that you may have. Thank you, Consensus, for hosting us. And one thing I also want to say is that I'm happy to answer any technical questions as well, but with the caveat that we'll also be issuing an additional white paper later this year to sort of go into more detail as to actual implementation. And that's it. Thank you, friends. Do you want to? Don't leave me all alone up here.
Hi guys, thank you so much for the presentation. I have two questions actually. One is regarding the non-qualified investors that you mentioned. Could you tell us a little bit of how you're onboarding them, whether there's any kind of minimum token threshold for them to participate? So that's kind of on the user / investor base. And I guess my other question is, the startups that you see in the ecosystem, what stage are they at? I mean, do you actually take bets on the pre-revenue type of place? So thank you.
All right. I'll take the second one first and then the first one, because the second one's easier to respond. So from what we've seen so far, there's really two flavors of companies that we see on the platform. The vast majority of them are usually either pre-seed or seed, but basically very early stage. Companies for whom doing a raise for up to $1 million, which is basically the Reg CF cap that we operate under, is actually meaningful because they need the cash to basically operate. Like, we're talking about runway for them. So they're incentivized to raise as much as they can because this will determine, how well if they survive or not. But we also do have certain companies who don't necessarily are interested in the cash itself. For them, raising on Republic is more of a PR and marketing move, because essentially, like, when you have companies that are doing ICOs on the side, $1 million is not really going to move the needle for them. But the proposition we make to them is, hey, you can sell to unaccredited investors, you can sell to your early users, people who may not be accredited, who may not have a significant disposable income, but they can still get on the bandwagon of your success and they can feel invested. So it's a bit of both. I don't exactly have the exact breakdown, but it's somewhere between 60 and 80% early stage, and then 20% the bigger players.
And so I'll add to that, because I think what Laurent clearly brought up is really more of our public raise platform that's to our retail investors that really tend to be a little bit earlier stage. We also have these new products with our private sales that bring on a little bit later stage companies where investors, we can do syndicates from anywhere from 200, 500,000 to a couple of million. And there we're actively interacting and engaging in a slightly different way, a little bit more hands-on with high net worth individuals, angel investors, family offices to bring in that type of money in addition to our institutional and in addition to our institutional races that come through our broker dealer. And within that network, we kind of separate those two. It's like the public sale, you're doing it for very different reasons. It could be a later stage company if you're just looking as an additional marketing benefit, or early stage if you're looking to raise that first million. And then the private sales just take on a different world. But if, investors, then that way we go ahead and put them in these different types of products depending on how much they're looking to invest and, how quickly and across how many different offerings.
When it comes to your first question, when it comes to educating investors onto their expectations around the token, I won't lie, it's tricky. It's even tricky to sell it to startups as well, because there are startups with founders who are extremely sophisticated to whom we don't really need to explain the appeal of what we're offering them. But we want a tokenization initiative to apply to all startups across the board. We won't really be making exceptions now for hey, do you want to have your securities turned into token-backed derivatives? It's not really, it's something we want to apply across the board. For the investors, it's difficult because we pride ourselves in our ability to educate our investors and to make the experience as painless as possible. But creating a platform where you reward investors with tokens that are backed by future revenue, it's a little tricky to sort of get across to people who don't necessarily have the right kind of, who don't necessarily aren't steeped in that world, as it were. So, there's no real panacea or great solution. As much as we can. Now, as part of the investment flow, it's something that we try to make clear basically everywhere what kind of expectations you have and what kind of returns you have. And then after that, it's all a matter of nurturing good investor relations and being there whenever they have questions. There's really no magic pill. You just have to educate them and be there.
And I think that's the exciting part, right? That we're talking about a brand new market. The concept of tokens in this room is obviously much higher than the average population, but slowly but surely we do work a lot on those educational pieces. And we do think this can be a lot of people's first token, right? Because they're already coming to our platform to invest in traditional equity in many cases. So this allows them to have exposure to tokenization and then look at other projects that they would normally not be looking at.
And then again, you may think that explaining tokens to regular people is difficult, but even the whole act of investing in startups is also something that we struggle to educate people, at least in the early days, because it's not something that people can easily wrap their mind around. You invest in a startup, you get a security, you get certain rights, certain obligations. The returns are, somewhat nebulous in the future. So we sort of have experience already, sort of explaining those kind of complicated financial mechanics to regular people. It's kind of it's in our DNA, as it were.
Any other questions?
Now or never.
Actually, I have a question.
Sure.
So how do you feel about this current phenomenon of IEO? Is there sort of similar business as you guys? How do you see this space evolve over time?
I think it's been very interesting, right, to watch sort of the rise of the IEO to the STO, or from ICO to STO to IEO. I think there's definitely a lot of promise, but there's also a lot of questions in the industry, right, that still have to be sorted out. So part of our expertise is really hiring some of the best people in the industry who we actively follow, all the newest trends and sort of new findings from the SEC to make sure that we stay on top of it. And it's definitely something that we're open to. But I do think the entire industry, it's sort of let's see how it plays out when you get your first ones going. But we're definitely open to it. And our relationships really, we already have very strong relationships with a lot of the exchanges, and those are ongoing dialogues that we continue to have.
I guess a lot of IEOs that are happening currently are not really regulated or semi-regulated, whereas you guys are definitely very regulated. So I guess potentially there's some kind of play between you guys and some other regulated exchanges in the future, potentially.
Yeah. We're definitely open. You're absolutely correct. That is part of our differentiator is that we are a funding portal completely SEC compliant. That has always been from the start, and that is, a unique attribute of what we do. But as the markets evolve, we're definitely open to working with them and, you know, kind of depending on what happens. Any other questions?
The talk was so good, they have no questions.
Yeah.
That's right.
Well, thank you very much. We do encourage you guys, you know, if you have additional questions, please reach out to us. We'll be sticking around for a little bit. Or if you have any interesting companies you know, that you think may or may not fit our platform in terms of fundraising, you know, happy to talk to them. Thank you guys.